We're going to be looking at Nigeria's capital markets, particularly the NGX and the capital gains tax, which of course has been proposed in order to essentially tax with a particular threshold. 150 million is the threshold for you to sell off on those particular stocks that you've made the gains on. And there's a 25% that's triggered if it's reinvested in non-equities. That's anything outside of the stock market. And then most real tail investors are not supposed to be impacted. However, there's been some pushback on the capital gains tax. A number of participants have said that it's essentially, it doesn't treat everyone fairly. So I want to get into this debate with Dr. Patrick Ejumedia, who is the head of research at Sterling Asset Managers and Trustees Limited. Doctor, good to have you on the show. Thanks for joining us.
It's good to be on new office as well.
Yeah, exactly, right? So what do you make of the capital gains tax?
Yeah, so again, it depends on the angle that you want to take it from.
Yeah.
You know, if you take it from the angle of the government, then for me, I think then it's long overdue.
Okay.
Because a lot of time people just make money from the capital market and then bring it to fixed income.
Yeah.
And what that means is that at some point we're doing the fixed income TB rate of about 21%. That's high. So how would investors, people want to do real investments, want to invest at that rate? So what that naturally will discourage people who want to do real investment. So it's since that time that I feel government should have done it. You know, but however, I still think it's a good idea if you're looking from the angle of the government.
Yeah.
But if you're looking at it from the angle of the investor, of course it will be a no. Because again, it's going to make their exit a bit difficult.
Okay, let's have that debate then. So what the government is saying is that first off, if you, and of course, capital gains for our viewers is if you've made if the stock at which you sell it is at a higher price than when you bought it, and then you make a gain on the stock.
Yeah.
The 150 million naira threshold, they're saying that will not. You know, I'm definitely not selling stocks. What, 150 million? So small people like me will not be affected. They will not be affected. So what do you make of that? Because, and then also they're saying if you are reinvesting it back into the equities market,
yes,
you also will not be
affected,
yeah.
Yes.
So what do you make of that?
So that's why I'm supporting that view. The fact that you are reinvesting it into the equity market. Of course, many investors, what they do is that they put some money in the equity market, make some level of profit, and take away the profit. Leave the initial amount that they brought in the equity market, take the profit and put it in fixed income.
Yeah.
Now in fixed income, because of the high rate that investors were enjoying as at that time, what that would naturally do is what manufacturer, for instance, or what investor or real investor will want to go and put money to do real investments when a TB rate is given around 20% as at then, even though it has come down to about 15% now.
Yeah.
You know, so those are the issues. So for small investors like you and I who will be doing, you know, it might not really affect us, but for the institutional investors and retail investors that are big, some big retail investors, then they will.
In fact, speaking of which, I think one of them actually wrote an open letter to the government, and this was Mr. Keto Mukuri, who's the CEO of EFC. I think it's Emerging Frontier Capital, or so is the name of the company. So it says it's going to put pressure on the NGX. It lacks equitable. That was the word I was looking for. Equitable treatment. It's not fair, and it will increase cost of equity. What do you make of the arguments he's making?
Well, for me, the first one, I would say no. It will put pressure on the AGS, but it might be in the positive direction, depending on how that policy is being redirected.
Yeah.
If those equities, those monies that are redirected into the equity market are put into a productive equity, what that will do is to bring about growth in the equity market. Maybe not immediate, but sometimes to bring about some level of positive growth in the equity market. Yeah, but if you now say to lack equity treatment, one of the reasons why government is doing that is to bring some level of equity. So,
that's what the tax does. That's what it's supposed to do. Right.
So these are the issues.
Okay,
you know.
So look, the fact that the currency has been devalued has made stocks cheaper for foreign investors. So do you think? I mean, he's obviously, EFC is obviously an institutional investor. They're a large frontier market. Sterling Asset, folks like you. So for the bigger institutional investors, do you think they will?
So the fact again, if you have the data, you look at the statistics in terms of the players in the Nigerian equity market, you will see that it's mainly domestic.
Okay.
Yeah,
So
there are some pressure that if truly it is foreign, then it might have some pressure on the exchange rate, and that might affect particularly this issue of stability that we're talking about, because some people want to do withdrawal.
Yeah.
But like I've said, if you look at it, it's mainly domestic, even though we have some foreign investors that are in that space as well.
Interesting. All right. Well, final word on the tax. You're saying so. It's there's two ways to look at this. What you're saying?
There are two ways. Yeah, it depends on, again, if you're looking at it from, like I said earlier, from whether you're looking from the government perspective.
Yeah.
Remember that government is talking about, we've all been saying that we want to see regrowth.
Yeah.
And how do we get this regrowth? We need to see investments in those productive equity space. Those sectors that can create jobs. And so once those monies are being reinvested in those spaces, of course, what that will do, there will be some level of expansion, and they will create job, employment, and all that. In addition to raising revenue, increasing the tax base of government, that is going to bring to the government. But if you are not talking from the angle of, let's say, an investor, of course, you won't like it.
Gotcha.
So I've seen some foreign folks who will tell you, for instance, that, exchange rate is appreciating, that they don't seem to be enjoying it because they want the exchange to depreciate, that they can come and do dirty December. So for an individual, what is good for an individual may not be good for the nation.
Makes perfect sense. I want to quickly touch on the consumer goods sector. PZ Cussons. I was using there's a soap I was using at home, and I just realized it was made by them. So this is one of these, of course, consumer goods players. Their Q1 2025, 2026, I know their financial year ends in May, so this is their first quarter for the new financial year. Pretty much they bounced back to profitability, and I thought the stock price, I think 40-something% as at the end of September. So what do you make of their rebound in consumer goods?
Yeah. So yes, it's good because, of course, last year it was negative, like we've seen, and now they are making profit. So it's good for a country who was making a negative profit or a loss as at last year and it's coming again from profit. But the question is, what is driving that profit? If you look at the difference between their cost of sale, their their gross profit and their profit before tax, you will see that it's a large number. So the question is, and once you try to deep down further, you then see that there's sale of assets and there's also FX gains. And so people start to think that that's maybe one-off. So the question, will that continue? These are questions that we need to ask. But overall, I think it's good for them to come from negative to positive.
So taking a wider view of the consumer goods sector, which it's rallied so far this year on the NGX. Well, what's your view on the consumer goods sector?
Yeah, so again, the consumer goods sector is a core aspect of the manufacturing sector. And if you check the last data of the Q2 GDP that was released in terms of our GDP, you saw that among the industrial sector, the manufacturing grew just by 1.6%. This is the least on that sector. So for us to have that growth that we are talking about, we need to do all we can to be able to ensure that we grow that sector, because that sector is the sector that creates employment, that creates job, and all that. So I think for me, even though the sector is still struggling, because of the challenges that they are facing, and of course some of the challenges we know them: competition from imported goods, infrastructure, energy, inflation, exchange rate issues, and all insecurity issues, interest rate issues, and all that they are facing. I think it's high time we begin to look at that sector and then begin to see it as a sector that will drive growth. So
as far as the outlook for the sector, I mean, you've mentioned some of the headwinds there. Do you think those headwinds can still pop up, or do you have a generally optimistic view on consumer goods as well? Because we're in the Ember months now. December is coming up. People are going to be hosting parties, buying everything and stuff like that. So what's your outlook for the sector?
That brings me to the view that I was trying to talk about. Some folks are saying that exchange rate is appreciating, so it's reducing the dollar that they are bringing to the country to spend. So they are not happy about it. But anyway, that's on the other side. But again, I think what is very important is that, for me, because exchange rate is appreciating now and inflation is coming down, again, the CBN has started cutting rates. These are issues that will begin to, outside the macro issues, there are also firm-specific issues that we then begin to address, which has to do with the kind of machines that they are using, operational efficiencies and all that, in terms of the corporate governance in those companies, and of course in terms of the cost-cutting metrics that they are put in place. So those are some of the issues that that might affect the company going forward. But again, if we look at the macro environment and we see that it's coming down, I think there's a good outlook for them.
Fantastic stuff. Dr. Patrick Ejumedia, Head of Research, Sterling Asset Management and Trustees Limited. Thank you so much for your time. Appreciate you joining us on the Global Business Report.